All right, welcome to the show, Contractor Talk with Richie Kidwell, building damage experts. Today we have a great show for you. I'm your host, Richie Kidwell, co-host and attorney Hans Kennon. What's going on, brother?
Welcome to be back. I'm just pulling some statutes up here on the phone. I know we're looking at some topics about matching, what matching means and what it's about.
Wow. That's the topic of our show today. We're seeing more and more exclusions and caps, but let's talk about limitations now, right? Because everybody knows exclusions, right? You're like, okay, it's easy, right? Most of them have, like, say, an asbestos, exclusion. You're like,
right.
Okay, so it doesn't okay, so that's an exclusion.
So you know,
right? So and it's right off the bat. It's like, okay,
right.
We don't cover this, but we cover. Okay, it's like, all right, but when they start talking, when it gets hazy in my head, it's like, okay. Well, now there's and now there's caps. Now I'm like, okay, so now I'm like capped on like sewer backups now and water damages.
Yep.
Now there's limitations. What now? and
so there's a cap. A lot of times now there's
and
caps,
now there's endorsements.
Caps and limit. There's an endorsement that allows for a cap and a limitation.
Wow!
Yeah.
All in an HO3 policy that used to not fly here in the state of Florida. We have statutes that say we have to have two major things. In an HO3 policy, the Florida statute says we get RCV, replacement cost value coverage. It's like what they call full coverage insurance.
Right.
And then ordinance and law. And they even made it a statute amendment where you can now sign and reject ordinance and law, which is usually, hey, I will give you 10 or 25%. For code upgrades and things like that. So if you had, older, whatever, electrical or plumbing or something like that was part of a loss, but you had to bring it up to code, that would cover that indifference for the code upgrades and compliance. And everybody needs it. People's homes are built in the 70s and 80s and then getting damaged in the 2020s, and so there's a big gap where we have to bring it up to code compliance. So we need that. So it's important. These things are important. Replacement cost value, ordinance law is very important. But then the Office of Insurance Regulation, these D-bags from Florida that obviously hate consumers. They're in cahoots with Citizens, which is owned by the state of Florida. Our government that doesn't care about consumers, obviously. We have 6.5 million policyholders with a single family residence that needs HO3 policy coverage. The rest of them are renters and condo owners and multifamilies and duplexes and things like that get different policies, DP3 policies and different things like that. But HO3 policy, 6.5 million participants, 22.5 million people here in the state of Florida currently. And so that's a big market. And what we're seeing from the Office of Insurance Regulation is like, listen, man, we only care about the insurance companies, right? They're the ones that fund us. Like, look at our CFO. Jimmy Petronas, a fish restaurant owner from Panama City who knows dick about nothing, and now here we are. He's running our insurance, DFS, Department of Financial Services, the CFO's office, which is over DFS and Office of Insurance Regulation. Yeah, right. He was funded out of the, I don't know, $3 million by the insurance companies. And that's all that he raised. I think it was like $3.5 million, but $3 million of it was insurance companies.
Yes.
So it's like, okay, Fox Garden, the hen house, whatever. And then, and on top of that, he's just dumb, so that doesn't help. Anyway, but he just allows the Office of Insurance Regulation to do whatever he want. He literally told me at one time, and I was just so pissed off at David Altmaier, who quit last year, the year before rather, and so he can be a lobbyist, right? And then and before the 6-year rule came in, before he had to wait 6 years, he only had to wait 2 years. So he quit after he lit a fire in a dumpster there in Tallahassee, and then quits right after. It leaves it burning, and so here we are with Office of Insurance Regulation just doing whatever the insurance companies want, and allow them to put in policy caps, policy endorsements with limitations and further caps, and so we're going to talk about that now. The biggest one that's very concerning, outside of these dispute resolutions where each party must bear their own fees and costs, like binding arbitration. I don't like that, obviously. My organization filed suit against that. It doesn't seem to be fair, but then the governor codified it later. So that's allowed. So be on the lookout for that type of endorsement. You don't want to have binding arbitration where each party must bear their own fees and costs. But one that's even more concerning right now
in quality, color, or size, the insurer shall make reasonable repairs or replacement of items in adjoining areas. In determining the extent of the repairs or replacement of items in adjoining areas, the insurer may consider the cost of repairing or replacing the undamaged portions of the property, degree of uniformity that can be achieved, and the remaining useful life of the undamaged portion and other relevant factors. So basically, when the insurer comes in, you think about your house these days, especially more modern homes. In the old days when I was a kid, you'd have like one room had this color carpet, the kitchen had linoleum, one other room had another type of carpet, and there was definite areas that changed. These days, you go into most homes and the flooring, whether it be tile or premium vinyl, whatever that might be they use these days, tends to cover the bulk of the house.
Right.
Now, when they make these things, they don't make them all the same. There's dye lots, and they put a little dye in, a little more, a little less. Things change. That's why when you go to Home Depot and you look for flooring, you don't just take the first 6 boxes, right? You pull them out, and you're like, all right, let's look. How do they look? Do they match up? And maybe there's a date on it, a time they were made, something to give us some indication.
Right. A certain batch that you want to stay within.
Yeah, because otherwise you put them down and you go, oh, whoa, that's weird. That whole section's dark. That whole section's light. And so what happens if assuming they match, when you put it all down, if there is a loss and you have undamaged portions, well, you start putting new stuff in. New stuff doesn't look like old stuff.
No.
And they're supposed to consider, the insurer will say to the next threshold. I disagree with that. They'll say, well, to the next door. If there's a door that closes and there's a little piece of marble or a little seam there, we'll only pay to there. Well, I mean, I don't live with my doors closed. So, so if you open the doors, you look in, you go, well, that's weird. You can tell it stops.
It's no longer uniform.
Right, no uniform. It stops at this bedroom door, and it looks different in there. And the idea is they should really pay for all of that. And insurers historically, with some prompting, usually by me in some litigation process, would suggest that, you really should make the whole thing match because that's what the client had. Right? An HO3 policy says bring it back to its pre-loss condition. Well, a pre-loss condition means my roof looks like it has the measles. Well, that's not pre-loss. I didn't have an unmatching roof when this started. My floors didn't fail to match when we started. So they should be brought back. And if it costs extra to replace all of that flooring, all of that roofing, that was really, honestly, historically, not that big an issue with the insurer. I mean, again, some prompting might be needed, but you didn't have to go after them to the end of the earth to try to get them to do that. You certainly do more now, and that's part of this endorsement we were just talking about, where they've now say, well, actually, it's funny. The insurers and the endorsement says, we'll pay for matching only up to 1% of coverage A of the dwelling coverage.
Right there. Specifically, these endorsement cap the amount insurers will pay to match materials at 1% of the policy limit for the replacement. They're like, okay. And I was there for the inspection. The guy was very nice. He's like, okay, yeah, we're going to go ahead and pay for this and the island and all that. And I said, okay, I have a question for you. Like, the lowers are all affected. The water went from the island and affected some of the other lower cabinets on the other side, which are right below the upper cabinets, right? That's why lower cabinets are. And then the island is where it existed from. And it went underneath the wall or underneath the flooring. So it affected the flooring. He's like, I'm going to pay for the flooring. I'm going to only pay for $5,000 for uniformity for the undamaged material. I was like, well, what do you mean? It destroyed the bottom of the whole bottom row of the cabinets. You're not going to match the top. And they're like, yeah. And they looked at coverage A and it's like about $500,000. So yeah, we're going to get $5,000 to match the.
That insurers can now be like, hey, they go out, the field guys can go out and tell the insured, you're covered for these cabinets. No question about it, even the ones that aren't damaged. So they come out and they tell you, like the guy told you, they're covered, right? I mean, and that makes everyone immediately go, oh, good. The cabinets are covered. It's all going to work out. And then it really makes, again, what I find unfortunately amusing is that they can be like, hey, you're covered. We're going to pay you 100% of the value of that up to the endorsement level. People are like, oh, right. Because if you weren't there, right, if you weren't there asking these questions, the adjuster would have left, and your friend would have called you and said, "Hey, good news, it's covered."
Yep.
Yay.
Oh, yeah.
And then
all the damages are covered.
Right. And then 30, 60, 90 days later, they get a check for $5,000 and they call you and they go, "Well, that's weird. The guy said, the nice guy, the field adjuster, he was a good guy, right? He was a good guy.
Super nice guy.
He said it was all covered." Well, it is covered. But if you ask the right questions and have the sophistication you have and I have with these things, you'd say, well, 100%, or is there a limitation or exclusion?
Mm-hmm.
No exclusion. There is a cap of 1% of coverage A.
Right.
So again, it gives the adjuster the ability to come out, extend coverage all day. Can't place a cap or a limit. It just says the insurer has to consider all these factors. So on a rare day, the insurer may say, "Look, we're not paying nothing for this matching. I think they're fine, or I think it's a bogus loss or whatever." But they're able now to cover things and pay that lower limit. And they literally cut out the knees of any claim that the insured might have. Or if they come to me or come to you, I'm going to say, "I'm really sorry." They did cover it, and they paid 100% of what the endorsement requires.
That's right. And that's where they get you, where they are going to try to show you that they're the nice people that they are, but they're really screwing you. They're waiting till your back's turned and throwing a dagger at you and being like, "Hey, I told you it was covered and I wasn't wrong.
Right.
But here's your $5,000. Good luck." And that's where you're like tilting your head sideways and you're going, well, and the average person isn't saving up. I don't even save up. And I think I'm just regular average Joe because I'm not saving up for that because I have insurance.
Right.
Like I have enough for my deductible.
Sure.
But God forbid I have, a major event in my house. I'm expecting the insurance to cover it. That's why I have it, or else why am I paying for it? Now it's $5,000, $6,000, $7,000 a year and up.
Yeah.
I expect to get now the red carpet treatment for crying out loud for as much as we pay and the little coverage that we have. So to recap on the cap, there are endorsements that have caps buried within it. There are limitations.
Yep.
There are, and again, and I mentioned the caps, but we're going to say specific perils. Where when I say peril, I mean the how the loss started, like what caused the loss. Was it wind? Wind would be a peril. Sewer backup is a peril.
Yep.
A supply line leak. All this other stuff, and it's only like a couple grand. And it's like, I don't know, is this right? And then the first thing I look at is I scroll down and it's like $5,000 total is what you have
for sewer backup.
$10,000 water coverage. So if you have a fresh water line, like a pressurized water line bust, like a pipe break or something, copper wire, copper line, whatever, something bust. Now he had a $10,000 water endorsement and $10,000 for mold. So I'm like, wait a minute. So you really have $25,000 of cover. That's all in case of a sewer backup or a supply line malfunction. That's it. But $400,000 in case your house burns down. But that's
which is like, if you think about the amount they're off, the 25,000 on 400,000 is what would that be? Like 3, 4, 5, 6%. Of the 400,000 is what's really available for you.
To add insult to injury, it probably has this crap in there too with the 1%. So he's probably for crying out loud.
But yeah, I mean, again, homeowners policies have become more and more of a catastrophic loss policy, where you have it really for the idea the place, God forbid, burns to the ground. Things still catch on fire, but construction methods, quality of wiring, quality of breaker boxes, quality of even space heaters, for God's sakes, these days. Fire is a much less common peril than it's been in 100 years. So, but again, you still have that. That's really what everyone thinks.
You never know when you're cooking bacon and you start a fire.
Right. And those things do happen.
It does. I mean, grease fires are probably the number one way that things burn down. I mean, I don't know how to imagine, or fireworks.
Yeah, but it's just not. I mean, and they tend to be limited. It's a lot of times the kitchen and things like that. Again, not to suggest otherwise, but when people's motivation to having coverage used to be much broader. Like you used to have it in case something happened, right?
Right.
Because something sudden and accidental happened to your home. This was different. Now you're more like, well, the house didn't burn to the ground. We better not make a claim.
That's crazy. I mean, the self-insured market, I'm sure, is going to rise from this. Only if mortgage companies would accept it.
Right.
We'll see, though. I mean, with these policies the way they are, I don't know why mortgage companies aren't more up in arms about the coverage or the lack thereof that these folks have. Because if they have to pay their attorney's fees out of pocket, their experts out of pocket, they're not going to replace a roof. They're going to fix the roof. Yeah. And then it's not going to be the value that it should be. And it's only going to hurt the value of the home. It's going to hurt the mortgage companies, the banks. We'll just see.
I mean, I'm with you. I mean, I've been doing this for 28 years. And I've always wondered why mortgage companies did not involve themselves more in the claim process. Mm-hmm. If the bank owns your home and they own most of our houses, right? We rent by our mortgage payment. Ideally, one day they're gone. But the fact that mortgage companies I agree with you, are not up in arms and just outraged by claims handling practices by the homeowner's insurer is just surprising, because if the insured doesn't have the money and the house falls into further disrepair, that impairs and impacts the value of the collateral, which is the very thing underpinning the mortgage. Mm-hmm. So the fact that for all these years, I've never seen anybody any mortgage company show up at any hearing in Tallahassee and say, you got to do something about this because it's our property. They own it. The insured owns it really in name only, unless they've satisfied that mortgage.
Right.
And the fact that mortgage companies have not been up there has always been a surprise to me, because I don't know why they wouldn't want stronger protections for the collateral that they're paying for.
Right. If they have an interest in it, why don't they stand up and fight for their interests? It's beyond me. But, and it is, a lot of folks look at, or outside of Florida, look at Florida for major change and then do that in their state. And so this is something that we are not proud of. we don't want to have or see in other states. Just the erosion of our policy rights and our benefits under the policy is just so well eroded nowadays, and the premiums have only gone up and up.
Yeah.
Like, it would make sense if we actually had that type of coverage. I'm like, okay, I'll pay a little bit more as long as I got everything covered. I still have the red carpet treatment. Like back in the day, it used to be like, hey, you got damages to your home. It's under the named peril list, or, sudden and accidental or whatever, boom. I'd be okay with that. I'm like, cool, because I know I'm going to be taken care of. I'll pay for a good service, right? You get what you pay for. But what I don't want to do is pay an extraordinarily high price for very low eroded coverage. And like I said, so let's recap here. We don't want to, you want to be cautious of caps. Like we talked about the sewer endorsement cap now, where they will cap you at $5,000 for a sewer backup. Any damages caused from a sewer backup. That's if you have like
when
a
you think about
tank.
That's not just like, oh, my toilet backed up and a little bit of water got on the floor. We're talking about what you're talking about. For $5,000, if you have a situation where you have a real backup, a septic tank or something of substance, and I've seen those losses, and the cost to clean a septic tank, potentially half full of effluent, as they would say, is incredibly expensive, time-consuming, nasty, and really it's hard to ever really get it back to how it was.
Yeah, no, that shit costs more than $5,000. We'll just say that, right? And to clean it up definitely will supersede that. So, but they're capping you at that because they know the two major ways that water gets in your home, that damages are caused, are by heavy inclement weather events like wind and sewer backups. Yeah. I mean, those are the biggest ways that damages are done to home. And then you also have these freshwater pipe breaks. So you think about a pressurized water line, right? Water that's coming through, the city and into your home. It's on a pressurized water line. Sometimes those fittings break, or you get a little pin hole in copper or any of the other lines. Well, now they have water damage endorsements, which would then encompass that type of loss. and now they're capping that at 10,000.
Yeah.
And then they're giving you some mold coverage because if there's water, there could be mold after that. So you have that additional, oops, if there's mold now, it's been sitting there for several days. Now mold has grown. So you have that additional 10,000. But that's it.
Yeah.
You know, you're done if it's that type of loss, right? And so you have to be worrisome about those those caps for $5,000 sewer cap, $10,000 limited water damage cap.
Yep.
So you want to always increase your mold whenever you can. Try to get $50,000 in mold. You know, usually that coverage is small. Talk to your agent on the cost of that. But if I were you, I would up it to try to be at $50,000. Try not to have any of those caps, and ask your agent what the additional limitations and endorsements are going to be. Say you look for caps, endorsements, and limitations. I want to know that first, right off the bat, because I need to choose the carrier accordingly. So be on the lookout for that. Now, Citizens policies are going to make you get these flood policies now. They made a law last year that within 5 years, every Citizens policy owner will have to have flood insurance as well. So not every carrier is doing it, just Citizens. So look for other carriers outside of Citizens if you're not in a flood zone and you don't want to buy the coverage.
Right. Fair enough.
Yep. There you go. All right. So that's it for the show today. For this particular show, be on the lookout when you're buying a policy or renewing your policy of insurance in the state of Florida. As a consumer, my advice to you is just to watch out for those caps. You know, again, the sewer caps, the water, limited water endorsements. And I was going to move on over to the managed care program as well. That's something else you want to be on the lookout for that you don't want to elect to have. If they offer you a discount in exchange for what they call a managed care program, do not take the discount. It's only like $50 or whatever for the year. Trust me, you want to choose your own provider. You don't want to have a prime type of premium, policy because of premium you're paying, and then get Medicare-like type of treatment whenever you file a claim. And that's exactly what you're going to get. You're going to get some managed care provider that's going to be like, hey, I'm here to fix this, whatever. And it's just like, I'm, at half mast, untrained, licensed and insured person because they're doing it on a very small budget. You don't want that. You're paying a very high premium. I'll tell you, my advice to you is not elect for a managed care program type of policy. I would just be on the lookout for that. More and more insurance companies are offering that and saying, hey, we'll take, if you have a claim, call us. We'll take care of it. And we'll offer you $50 for the year discount. Don't take it. I'm telling you. Any other things you're thinking about, Hans?
No, just following up on that. I would agree the managed care program or the preferred contractor is called a lot also. And what happens with that is when they come out, even though your insurer sent them to you, the contract will make you sign the contract. I went down a show with State Farm some years ago where State Farm said, if the contractor we send out does a bad job, we, State Farm, are not responsible for the contractor because you, Mr. Insured, signed the contract. And we were just like, whoa, wait a minute.
You made them sign that contract.
You sent them out. But I mean, and the guy, it was pretty heated for a while. We got it worked out because we were certainly in the right in that case. But be cautious. Whenever the insurer sends someone out, the vendor is going to want you as the insured to sign the contract and be responsible for payment. Even if your insurer denies your claim, which I just had, the insurer came out, they sent out a dry out company. There's a little bit of variation, but the insurer sent out a dry out company. Dry out company took out all the cabinets in my client's kitchen and then left. Then the insurer denied their claim. I mean, so the insurer says, okay, we're going to come out, we're going to look at it, takes out all the cabinets, and then denies their claim. They come to me and they go, I have no kitchen. I said, well, where is it? They said, it got taken out. I said, by who? I said, by the mitigation company. I said, did you hire them? They go, no, the insurer hired them. I went, wait a minute. The insurer hired a mitigation company that took your house apart and then denied the claim. So we got that redone. We got them all paid. They're all buttoned up and back to good. But when you see that happen, when the vendor says you need to sign, I'm going to tell you either not to sign or make sure you call somebody, call the agent, call someone at the insurance company and get some confirmation for yourself. Otherwise, you're putting yourself in a position of having your home liened if you have a dispute, or if the insurer disputes the bill with the builder's going to come lien your house.
That's right. And that's that's insult to injury right
Yes.
there. I mean, first they sent, and I've heard about it so many times too. The vendor from the insurance company doesn't get paid by the insurance company, even though they have a direction to pay.
Right.
And then they end up leaning the homeowners home. And then, like you said, then the carrier ends up denying their claim or not paying them, or the adjuster switches out. Even like several years ago, back in the paper in our Florida Speaker of the House had 7 adjusters after Hurricane Irma and just totally screwed up his claim. I mean, and he was a Speaker of the House, a very powerful position, and they knew it too, and they still screwed up the claim. And so that's just goes to show that like they screw up claims every day. And they put you on the hook by bringing out your a vendor who then liens your home. That you didn't even choose them. You didn't even want them in your home, but you were forced to by the carrier, all to try because you're just trying to be nice to the carrier. And then now you have a lien on your home. And now you have to call an attorney to get it all straightened out. See, if you haven't listened to this show before, you would just get screwed. Most people just kind of think like, okay, I guess, and then they try to finance it, and now they're paying out of their pocket when they could call you, Hans, and say, hey, I need legal representation, and you can get you reimbursed and back to pre-loss conditions.
Absolutely. Happy to help.
All right. This is our show today. Thanks again for joining us for this edition and just talking about exclusions, limitations here in a Florida insurance policy, here and other topics on Contractor Talk with Richie Kidwell and with Hans Kennon, attorney here in the state of Florida. So let us know if you have any questions on a topic specifically or even this topic. You can email the show. You can go to our website, contractortalkpodcast.com, or find us right here on Facebook. Go to Contractor Talk Podcast on Facebook and like us, follow us, subscribe to us, and even chat us up there. We'll be happy to put you on the show or answer any questions. We'll talk to you guys later. See you.